Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. It's the last trading day of the week. Happy Friday to you guys, and trust you having a wonderful moment out there, and of course preparing for the weekend. Well, it has been quite an interesting 24 hours across all the assets on our watch list for this week. Remember, we have been monitoring the US All Spot, the USDJPY, and of course the XAUUSD, where we had some interesting situations yesterday after price action gained some traction, some significant traction across board. And though the week did not start on a rosy note for us, as we saw price action going in through a consolidation phase throughout the first half of the week. And if you remember what I said here yesterday, that as we gradually approach the end of the week, that we are likely going to be seeing some traction, and it is very, very important that we position ourselves strategically and be on standby to capitalize on this move when it finally happens. So that is why we do not give up on our analytical approach, as we all understand why the market was behaving the way it was behaving, as we did understand that market participants were finding it difficult to make a stance despite the uncertainty surrounding the timeline of the Federal Reserve interest rate cut for the year 2024. Now, with the way things are going right now, and coupled with the fact that we are already on the last trading day of the week, we all know how peculiar such days are, as market participants will gradually be rounding off their trading activities ahead of the weekend. And as a result of this, we may likely see some reversal setup, price moving in the opposite direction of the prior leading price action, which could also give us some significant opportunity to capitalize on. So we're definitely going to be taking advantage, taking into consideration this perspective, while we also review the current market structure using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. So I encourage us all to stay tuned in so you don't miss out on the valuable ideas we will be deliberating on today. And I forgot to mention that I mentioned earlier that I wouldn't be coming in early this morning, as due to some personal things that I needed to sort out before I began. And for those of you who waited patiently for the session, I really appreciate your patience and thank you for your understanding. So, and for those of you who are joining us for the first time, you're highly welcome on board, and I'm very excited to have you around with me this morning as we prepare for both the London and the New York session. If you're wondering what this is all about, what is the Forex Morning Mastery all about? Well, to simply put, I usually share a couple of videos during the course of the weekend, which during the Forex Morning Mastery, we come here together to monitor and follow up on these assets, see how we can manage our existing position and how we can prepare for any new trading opportunities. So we usually do this on a daily basis, 8:05 a.m. UTC, 9:05 a.m. West African time. And this is when we start the session, unless except for today, where we are starting a little bit later. And of course, I did a communique on that regard. So I welcome you guys on board, and it's also important for you to note that my aim here on the Forex Morning Mastery is to help equip you with the necessary skills and understanding in making your own independent trading decisions. And trust me, the more time you spend with us in this community, the better you get to understand our analytical approach here, and eventually be able to use the information you gather in this community to make your own independent trading decisions. So once again, I welcome you on board and encourage you to actively engage in the comment section. And also do me a favor, click on that like button. This is the only and cheapest way you can support this channel to grow, and thank you very much as you do so. So with that being said, we will be diving right into the business, and as usual, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be affecting the market sentiments today. And of course, we all know how important this exercise is, as these fundamental factors often manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on the next potential move prior, during, and even after this economic event. Now, based on the asset we have been monitoring since the beginning of this week, we have been focusing on economic features from both the United States and the Japanese economic docket. However, for this week, like I told you earlier, that we do not have any high impactful event from the Japanese economy, and in fact the high impactful event we have from the United States were just a couple of them. That happened on Monday, the services PMI, which of course came phenomenally well. We recorded a high figure on that one, which further emphasized the resilience of the United States economic docket. And then we also had some speeches through the course of the week, and at the beginning we had a speech from the Fed chair Jerome Powell, which of course he emphasized how inflation pressure is still very high in the United States, and the idea of a rate cut is not on the table at this particular point in time. And then we also saw other speeches from Wallace, Buster. We had a lot of speeches during the course of the week, and in fact we are having one today. Now today, Friday, February 9, looking at what we have here, and after including the mid-tier economic features, we only have one speech which is coming up later in the day, and this is from Lori K. Logan, who is the Chief Executive Officer of the Federal Reserve Bank of Dallas, and is also a voting member of the Federal Open Market Committee, that is the FOMC. And of course, whatever it says today will definitely be giving an insight into the monetary policy outlook of the United States, and of course the economic situation of that environment. So well, this is the only one we have for today, and I'm very sure that whatever I say, the rhetorics will not be different from what Barkin and Bowman and Wallace have been saying through the course of the week. And at this point, I want to consider the US dollar as very, very strong, and considering the fact that there is going to be a high interest rate for an extended period of time, investors will still want to invest in the US dollar. So let's look at the structure from a technical standpoint, and let's see what has been going on in the past couple of days, and of course see how we can strategically position ourselves for the next move, while we also manage our existing positions. Now, as usual, the first asset we will be taking on today is going to be the US Oil Spot. On the US Oil Spot, we had quite an interesting situation going on in the last 24 hours. Remember, we had a couple of losses through the course of the week, while we were also keeping on that bullish perspective on this particular market. And yesterday, while we were analyzing this market, we did talk about the potentials of sellers coming into this market at some point, and this was due to the latest development during Wednesday, Thursday, I think Tuesday, Wednesday, Thursday features from the API, the EIA, and of course the geopolitical tension in the Middle East, which of course has shaped the landscape of this market. And on Wednesday, we were considering the fact that there's likely going to be a ceasefire due to the fact that Hamas received and responded to the proposal for ceasefire. However, Netanyahu, the Israeli Prime Minister, yesterday rejected all offers to all conditions by Hamas as regards to the release of the hostages, which further escalates the concerns regarding further escalation in that region. And of course, the US Oil Spot had taken advantage of this development, these heightened tensions in the Middle East, hereby finding new highs during the course of yesterday's trading session. And of course, we also saw an Israeli airstrike on the southern border of Rafah yesterday also, and this action further incites regional tensions, uh, which of course is affecting the market presently. Meanwhile, the key US fuel producers surpassed Wall Street's earning expectations for the fourth quarter, as they recorded continued growth throughout last year. Very, very phenomenal figure. I don't have the right figures right now with me, but if you go through the financial news, you will get it. They did really, really well, which further uh, is likely going to drive the sustained global demand for oil. However, Russia's commitment to reducing crude oil exports under the OPEC Plus agreement is facing some challenges right now due to the unforeseen circumstances. Remember, a couple of weeks ago, we talked about the drone attacks on some refineries within the Russia um, territory, which of course is um, going through reconstruction at the moment. And despite its agreement to cap production at 9.5 million barrels per day, Russia also pledged to decrease export of both crude oil and fuel. But due to these attacks, they're likely going to ramp up some more production in that regard so that they can actually meet up with the expectations for the month of February. Now, considering these factors, everything I see here behind the scenes is supporting and of course maintaining a bullish outlook in this market, and I will continue to look out for more opportunities to buy this asset unless the current structure states otherwise. Now, for the sake of clarity and for those who missed out on our earlier editions, it is important let's look at how the week started for us all. And remember that the major part of the week has seen price action trading above the key level, which is situated at the $72 area. Remember, we talked about this on Monday. If you missed out on that video, please check the link in the description box below, and check it out after the live session so you can have a background knowledge of how we were able to identify that level and make that area as a key level for this week. Now, the $72 area, if you remember, shares a boundary with a very strong demand zone, which we did identify. And of course, despite the strong bearish momentum since the month of September of last year, we saw how this area between the $68 zone and the $72 area had been negating all attempt by the sellers to break through since the beginning of the month of December of last year. And since that moment, we've seen how the buying power here gets stronger by the day. However, at the beginning of the week, we had the opportunity of selling after price action broke down the ascending trend line we spotted on the higher time frame. Remember, which interestingly shares a beautiful confluence with the support line of that range we identified at the $72.20 level. And of course, the breakdown incited selling opportunities, of course, as a breach of the structure incited the possibility that this trend line could no longer negate the attempt by the sellers to break through that structure anymore. Though price did not move that far, it moved about 85 pips thereabout. We moved our stop losses accordingly, and we left that position at a worst case scenario break even or a little bit of profit depending on where you placed your stop losses. Then later on in the week, on Tuesday, I guess, we saw this engulfing bullish candle which finally broke out of the resistant line of that range to trigger our first buy position for the week. And since that moment, we have been buying this asset, and of course we did had multiple entries like the $73.27 level. We added more position right here. We also had it at the $73.65 area right here on Wednesday's trading session. And of course, during the Wednesday's Forex Morning Mastery session, we did identify a potential downtrend continuation pattern in the form of a pennant. Remember, we saw the situation here yesterday, on Wednesday, and on Thursday. That was yesterday. We saw this pattern here, and when we correlated this pattern with the latest development in the oil market space, especially the geopolitical tension, where we were seeing signs of a potential ceasefire, we were thinking that if there will be a ceasefire, price may respect this pennant structure, break the structure, the support line of that pennant pattern to incite a sell-off to the downside. And of course, we saw price break down that structure, and we had a couple of losses. We had a couple of sell positions. We had one on Wednesday, we had one yesterday. Both of them didn't do well as they went into stop losses, but thank goodness later yesterday we saw how price broke out of that resistant line. We had our buy stop order heart, which was situated at the $74.32 level. If you remember vividly, we talked about this yesterday, that if price action goes against the bearish expectation and breaks out of this resistant line at the $74.32 area, I mentioned that we should have our buy stop order sitting above that structure so that we can capitalize on that opportunity. And if you had your buy stop order around that area, definitely you must have your position triggered. And at this point, we are running with over 250 pips in profit at this particular point in time. So it was a phenomenal move yesterday, and congratulations to everyone who did capitalize on this opportunity, as we were able to recoup the couple of losses we incurred in the last 48 hours in this asset due to the choppy scenario that happened on Wednesday and Thursday. Now, as at this point now, since price action has moved significantly well in our favor, you know how we do it in this community. The next thing we want to be doing right now is to move all our stop losses and secure the current buy position. Personally, for me, I only have one buy position, as the market did not give me structures to add more positions through yesterday's trading session. And if you had more, well done to you. But at this point, let's move all stop losses, secure the current buy position. And from the look of things right here, you will see that since price action tested that $76.50 level, which happens to be the highest level for this week, you will see that price action has been going through a consolidation phase where it has been confined within the $76.50 level and the $75.90 area. Now, to move our stop losses, I would like to have stop losses placed anywhere below or around the support line of this range, while we give enough breathing space for price action to move around. So with a stop loss in place and with a well secured position at this juncture, how do we intend to capitalize on the next potential opportunity? Do we have chances of price continue to the upside, or are we going to see a reversal setup, which could be a reflection of profit taking activities as market participants gradually round up their trading activities ahead of the weekend? Well, to answer that question, we have a simple structure on our chart right now, which we will be using to guide our trading decisions going forward. And the simple structure we have here is this beautiful range right here between the $76.50 level and the $75.90 area. And of course, you know how we use our ranges in this community. Whenever we identify them, we exercise patience due to the prevailing uncertainty that is characterized by a range-bound trading activity, waiting patiently for price to give us a signal, which will come either in the form of a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. So at this point in time, based on the fact that price has been bullish since the beginning of the week, the chances that this whole pattern could transition into an uptrend continuation pattern is high. So we may likely see a bullish rectangle pattern right here, where the breakout of the $76.50 level will be all we need to capitalize on the uptrend continuation. So for me, I have a buy stop order above the $76.50 level, with the hopes that price will continue to find new highs at this point in time. Now, for those of you who are joining us for the first time, who are yet to have a position on this asset for this week and who do not have any leverage at all, I will suggest that you exercise patience and wait for a retest of structure, giving us a good confirmation to join that uptrend continuation. Now, the reason why I am having a buy stop order above that structure is simply because I have some profits in my portfolio already from this week, after taking advantage of the multiple buy entry earlier, so I can afford to risk some of the profit I've made to leverage and see if this breakout of the $76.50 level will work. So if it does work, fine and good, I maximize the profit on the buy position. And if it doesn't work, I know that I'm only risking some of the profits I made so far this week. So this is how we are going to be managing this one. So I'm expecting a bullish expectation today. However, if price action breaks down the $75.90 area, this could incite a counter trend opportunity. Well, for me, I wouldn't be taking this at all. And the reason is simply because I want to consider this to be a retracement move if it so happens that price action breaks down that structure. But if you are a counter trend trader, a scalper, or short-term trading, short-term trader, well, you might want to capitalize on that opportunity and looking at the TP target sitting somewhere around that structure where price action broke out of yesterday, around dovetailing to about 150 to 170, 180 pips they're about to catch. However, if I can see price action form some significant signal like series of lower lows and lower highs on our lower time frame, definitely I will give you an update if I will be joining the bearish momentum. But as it is right now, I want to maintain a bullish bias on this asset, looking out for more opportunities at the breakout of that particular level at the $76.50 area. So this is my simple view on this asset. If you have any questions, feel free to let me know in the comment section. As always, I will be taking the next 10 seconds thereabout to see if there are any questions before we move on to the next asset on our watch list. And if you have any questions, feel free to let me know in the comment section. I see a comment here. I see a couple of comments from Jonah Aruna. Good morning to you, Jonah Aruna. MOD King's Garage, good morning to you. Torres Master, good morning to you. Glad to have you around with us this morning. Yeah, you are quite right, Torres Master. The week has been very, very, very sluggish. The week started on a sluggish note. In fact, we had choppy situation going on. I did mention this earlier when we started, and of course I did talk about this yesterday too as well. And of course I mentioned that we should be on standby, that as the week gradually winds up and market participants round off their trading activities ahead of the weekend, we may likely see some traction. And lo and behold, we saw some things happen yesterday, able to incur some of the losses we recoup the losses we incurred during the course of the week, and of course we had some profit on top of them, and we are hopeful that we may see some more traction later today. So we will definitely be positioning ourselves for the next move. So I hope you did very well this week, Torres Master. So with that being said, here we will be in the absence of no further questions, of course, we will be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USDJPY, and also this asset did very, very well for us yesterday as we were able to scoop in some significant amount of profit, with over 250 pips in profit from 4 buy positions. Remember, Okay, let's quickly run through how the week started for us all, especially those who are joining us for the first time, to be able to be on the same page with us. So at the beginning of the week, we had we've had roller coasters of buys and sells before we finally bought again yesterday, a couple of days ago, and riding this momentum into what we have right now. At the beginning of the week, price action was more or less trading above our key level, which was duly situated at the 148.500 area. And of course, you know how we use our key levels in this community. As long as price remains above the key level, we definitely want to be looking out for patterns and structures that supports the idea of buying, and we are not selling unless price breaks down our key level. Now let me quickly state this again for those of you who missed out on my weekend video on the USDJPY, who are wondering how we were able to identify the key level. Then I will suggest you watch my weekend videos. The links referring to these videos are right in the comment section of this current video you're watching, so you can check them out for educational purposes. So with our key level sitting right around the 148.500, the first 12 hours, 15-18 hours of the week was more or less of price oscillating just right around the key level, to further emphasize the crucial nature of this juncture. And remember, if you watch my video on the USDJPY, the key level area is serving as a very strong resistant line, which has been holding selling pressure in the last 3 to 4 months. And as a result of this, we realized that price action was confined within a specified range that was between the 148.825 and the 148.275 area, to emphasize the prevailing uncertainty in the market at that particular point in time. And usually when we have a range like this, we usually expect and wait for price action to give us a signal before jumping into any position. And what we actually look out for is price either breaking out of the resistance line to give us an opportunity to buy, or breaking down the support line of that range to give us an opportunity to sell. Now, while we finish our analysis on Monday morning, on the Forex Morning Mastery on Monday, prior to the New York session, I did updated this chart where I begin to see the possibility of joining a bullish opportunity after realizing that sellers were finding it difficult to break through that support line around that area. And of course, we had this descending trend line as at that time capturing the first 12 hours of the week. We saw this beautiful trend line, which interestingly shares a confluence with the key level at the 148.500. So I did mention that a breakout retest of that key level will definitely welcome buying opportunity. So we had two positions triggered that day. The first one went into break-even worst-case scenario, depending on where you moved your stop loss to, while the second one, which was triggered at the breakout of the 148.825, did not do very well at all, as it went into our stop loss, hereby recording our first loss for the week on the USDJPY. Then price action went through consolidation phase, leading to the breakdown of the support line at some point. We capitalized on that one, and we looked out for more selling opportunities that if price goes ahead to break down the 147.800, that one also was triggered, but we had that the sell position that was triggered there went into a loss. But the first one, we were able to scoop in a little bit of profit, or worst case scenario break even on that one too. Now, as at Thursday's trading session, we begin to realize that the inability of buyers to break through the sellers to break through the 147.800 may be a sign that sellers have lost momentum and that buyers could take over the market anytime soon. And surprisingly, on Thursday we had the news, the dovish remark from the Bank of Japan Deputy Governor Uchida, I hope I pronounced that name correctly, where he mentioned that the Bank of Japan will be cautious after pivoting from their current ultra loose monetary policy, that they will be cautious in hiking interest rate, which is not something investors in the yen want to hear at this particular point in time, because they were expecting that if the Bank of Japan will pivot from the current ultra loose monetary policy, that they may likely going to hike interest rate at a phenomenal rate. But with that news on Thursday, we realized that the market did not feel comfortable with that statement, and as a result of this, we saw the dollar take advantage of the stance to push price higher. And of course, from a technical structure, from a technical perspective, we did identify this descending trend line, which we did say that if price action continues to trade below that structure, we will be selling, but a breakout of this trend line will definitely negate the idea of a bearish perspective, hereby welcoming buying opportunities. So as a result of this, we had ourselves positions above the 148.275 on Thursday, and since that moment we have been buying this particular asset. And remember, we did have multiple levels identified here, where we said we will be adding more positions at the breakout of the 148.500. And during our live session yesterday, we added one more position. We said if price goes ahead to break out of the 148.825 and the 148.920, we definitely will be adding more positions to our existing trade. And as of this morning, while I dropped my commentary, I did say that we will be adding one more position at the breakout of the highest point for this week at the 149.500, which has already been triggered at this juncture, and in fact price is running in a loss at this point in time. So we have about 5 positions running with approximately over 220 to 230 pips running in profit at this point in time. And for those who capitalize on this opportunity, well done, and kudos to you for being on standby to take advantage of this opportunity. Now that price action has moved significantly well in our favor, the next thing we want to be doing right now is to move all our stop losses to secure this current position. Of course, I did mention this in my commentary on both my TradingView and Telegram platform this morning. And if you would ask me, anywhere around the support line at the 149.135 seems most appropriate to move all stop losses to. And remember that we do want to be giving enough breathing space for price action to move around. So with a well secured position at this juncture, what is going to be our plans for today? Well, at this juncture, I believe that market participants are more willing to take risk in the market, and considering the strength of the US economy, and of course the strength of the US dollar as well, and the US Treasury bond too has also gained some traction in the last 12-18 hours, growing to above 4.1% as at the last time I checked. And we all know how the US Treasury bond yield is directly proportional to the US dollar. Now, for now, I think this recent development in the market is likely going to be affecting the safe haven Japanese yen at this point in time. But I still think that the market participant might hold off on making new aggressive bets, especially when we are anticipating the US consumer inflation figures coming in next week, which definitely is going to be impacting this market and of course influence the Fed's future policy decisions. So this data definitely will be crucial to this market, and the anticipation of this data could limit the upside, as market participants may want to stall the momentum and wait to see what the data of the consumer inflation figure will be like to make new decisions. Now, in the meantime as well, amidst the expectations of a potential shift in the Bank of Japan's policy stance, it is advisable to protect all buy position at this juncture, and let's see how we can position ourselves for the next move. Now, at this point in time, we can see that in the last 24 hours, price action has been range bound. Price action has been confined within this range at the 149.500 and the 149.135 area to emphasize the prevailing uncertainty in this market at this point in time. So it makes quite a lot of sense that we exercise patience wait for more signals to give us an opportunity to either buy or sell. So that is why I mentioned earlier that for those of us who already are capitalized on this bullish perspective, please secure your position, as anything could happen today, as market participants will gradually be rounding off their trading activities ahead of the weekend. We could see some profit taking activity happen ahead of the weekend, which could slice through the support line of this range, maybe bringing price back into any of this level. But I personally would not be taking advantage of that opportunity at this point in time unless something significant happens, which of course I will be updating you on both my TradingView and Telegram platform. But if you are a scalper, day trader, or short-term taker, you might want to capitalize on the breakdown retest of the support line at the 149.135, and then looking at these levels as areas where you want to be having your TP target. We have minimum of 30 pips to 65 and a maximum of about 120 pips. That is, price may retrace back into this descending trend line we marked out here, which of course was broken yesterday to incite new bullish expectations. So let's see how the market will play out here. But I still have a strong feeling that we may have some strong uptrend continuation, which we could be on standby to capitalize on. So this is my simple view on the USDJPY. If you have any questions, feel free to let me know in the comment section. And due to the limited time I have, I will just move right into the next asset on our watch list, which of course is my favorite and that is the XAUUSD. And on the XAUUSD, we had a phenomenal move yesterday after price action broke down the traded below the key level at the $2,035 area, and of course maintained a bearish outlook after noticing a series of lower highs in the last 48 hours. Though we had been buying this asset, we had this idea of buying this asset. Remember, at the beginning of the week we sold. At one point we were able to gather about 50 pips thereabouts before the bullish momentum set in. We added another sell position that did not do very well as it went into a loss before we had our another buy position triggered around the 2035. That was on Tuesday, and for about 2-3 days price was ranging around that 2035 area. And at some point on Wednesday's New York session, we had the privilege of scooping some significant profit, about 80 pips thereabout, before sellers came in again to push price to the downside. And one of the structures we did use to guide our trading decisions during the midweek was this beautifully identified ascending trend line right here, where we said if price remains above the trend line, we shall look out for buying opportunity, and that the only condition that will make us sell the XAUUSD was for price to break down that ascending trend line, which actually happened as we saw right here yesterday. And I told you that as long as price remains within the seller's territory, within the $2,035 zone, the chances that sellers could take over this market is still very intact. So as at yesterday, we were holding a bearish bias in this particular market, and I do hope you capitalize on that opportunity, as we were able to take a minimum of 3 positions, where the first one ran for about 150 pips. We had the second position run for about 110 pips, and the third one ran for about 65 pips thereabout. So we were able to run into over 200 pips on this particular move yesterday. And of course, you know how we do it in this community. When price action moves significantly well, we move our stop losses, secure the current sell position. If you have done that appropriately, you must have been taken out with a considerable amount of profit. And for those of us who did capitalize on this opportunity and manage, of course, accordingly, well done, and kudos to you for capitalizing on this one. Now, as it is right now, and based on the current structure, the current market outlook is still looking very bearish, and I did emphasize this in my commentary this morning as gold struggles to gather momentum during the Asian session. Now, throughout the Asian session, We saw how the market was trying to push, how the market was trying to attract some buying activities. You saw what happened here as price continued to range between the 2032 and the 2035 area during the Asian session to further emphasize the prevailing uncertainty around that point. But the fact that price still remains below the 2035 and that descending trend line makes it bearish for me at this point in time. Now, factors contributing to this sentiment includes a robust US macro data, which we have been witnessing in the last couple of weeks, and hawkish remarks from the federal officials too as well, where they emphasize the need for interest rate to be maintained for an extended period of time due to the inflationary pressure in the United States, and of course a sustained risk on sentiment in global equity market. All of these factors here supports the descent of the XAUUSD. So in that regard, I will be leaning to selling this asset as long as price action remains below the 2035 and of course the descending trend line we identified here. Now, furthermore, uncertainty surrounding the Fed stance on interest rate cuts still restrains market participants from making aggressive directional bets on the gold or on the US dollar at this point. So as a result, I still want to have it at the back of my mind that market participant, due to what I'm seeing right now, market participant might want to opt to await the US consumer inflation figures, which is coming up next week, for better clarity on the Fed's potential rate adjustment for the year 2024. So given these conditions, we need to exercise patience and wait for significant patterns and structures before jumping into any direction at this point in time. So like I said earlier, I have a sell position running at this particular point in time with the hopes that price will continue to drop to the downside, and if it does, we have multiple levels here that we will be using to manage our to maximize the potential of this bearish move. However, if the market in any way gives us a significant sign that buyers may likely take over this market, well, this descending trend line is going to be playing a major role in guiding any bullish expectations in this market. Now, the only condition that would make me want to be buying this asset, though I have a buy stop order above the $2,042 area, which of course price is even yet to come close to that area in the last 48 hours. However, if at any point in time today price breaks out of that descending trend line, I would like to see some confirmations on my lower time frame, like a retest of that structure, and the inability of sellers to maintain a momentum below that descending trend line will give me a signal to buy. And of course, this will reflect on the chart as continued buy pressure above this descending trend line to incite an opportunity to buy. And if we are lucky enough, if we see a reversal pattern like a double bottom structure, head and shoulder or falling wedge right above that descending trend line, we definitely want to be buying the breakout of the neckline of that reversal pattern, and of course look out for more buying opportunities at the breakout of the 2042. Now, I would like to emphasize here that our perspective on the gold will remain short term at this point in time due to the uncertainty surrounding this market. And of course, we know that market participants, based on the character of price action on the chart, that they may want to be waiting for the US consumer inflation data coming in next week for new clarity into this market, and this could lead into some choppy situation and price action move within a short range. And if you are someone who cannot navigate this uncertainty, and maybe you don't have the emotional will to manage such situation, I would just say you should stay clear of this market for now, and let's wait for next week and see what the new week will bring. So this is my simple view on this particular asset today. So let's see how the market is going to play out. Are we going to see price break out of the descending trend line to inside buying ideas, or price will continue to remain below the descending trend line to maintain our current bearish perspective in this market? Well, time will tell, but trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. And if you are going to be part of our XAUUSD live window coming up later today, then definitely you will be with us real time as we continue to monitor price action on this asset. If you have any questions, feel free to let me know in the comment section. As always, I will be taking the next 10 seconds thereabout to see if there are any before we go ahead to round off on today's Forex Morning Mastery. I see your comment, Adeni Babalola. Good morning to you. Glad to have you around with us this morning. The market this week is quite interesting with the ups and downs. Yes. We have a lot of ups and downs this week, and this was due to the uncertainty surrounding the timeline of the Federal Reserve interest rate cut for the year 2024, which is not yet concrete at this point in time. Though we have the odds pushed back to May from March for the interest rate cut for the year, for the beginning of interest rate cut for the year. So we never can tell what will happen, but market participants appear to be waiting for the US inflation data from next week for clarity into what to do next. So let's keep our fingers crossed. But I'm very glad that we were able to recoup the losses we incurred during the course of the week on those assets. We had some USOILSPOT, we had a couple of losses there, but we were able to recoup them. And on the USDJPY too as well, the same thing. And of course on the XAUUSD as well. So that is what I'm very glad about, that we were able to recoup those losses. So if you have any questions, let me know in the comment section. So like I said, I will take the next 5 seconds off, and please do not forget to give this video that thumbs up it needs. Your likes are very valuable to me, and of course it also helps the algorithm push the video to a wider audience of traders who may find the content beneficial to them. And thank you very much, guys, as you do so. And for those of you who have supported the project so far, that have clicked on the like button, thank you very much from the bottom of my heart. So let's see if there are any questions before we go ahead to round off on today's Forex Morning Mastery session. All right. So in the absence of no questions, we have come to the end of today's Forex Morning Mastery, and it has been a tremendous week, I will say. We had very complicated situations during the course of the week, but we try to make them as simple as possible for us to capitalize on. Though it led to some losses, like I said earlier, we were able to recoup them, and of course made some profit on top of it. And we look forward to today's trading session, where we are expecting more traction to capitalize on as market participants round off their trading activities ahead of the weekend. And so far today, we were able to take on 3 assets on our watch list, which includes the USDJPY, the XAUUSD, and of course the USOILSPOT, where we were able to, using our basic tools, to identify potential trading opportunities and as well manage our current position. So I do hope we all marked out these levels accordingly, and if you have done so, thumbs up to you, well done. And so all we just need to do is exercise patience and allow the structure to mature. And for those of you who are joining us for the first time, you're highly welcome on board. very excited to have you around with us this morning, and I do hope you were able to gain one or two things from what we discussed here today. And if you did, trust me, you want to be part of our subsequent editions. The more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the knowledge and skills you gathered here to make your own independent trading decisions. So it's on this note I want to wish us all the best of luck, and please remember, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. And as a result of this understanding, you do want to be having a well-defined risk management strategy in place to mitigate against any risk on your portfolio. So I wish us all the best today, and on this note, do have a wonderful evening. Trade smart, trade consciously, and happy weekend to you all. And if you are yet to subscribe to the channel, I encourage you to do so, as I will be sharing a couple of videos during the course of the weekend which will be indicating my plans ahead of the upcoming week. So click on that subscribe button, click on the notification bell, and let's keep this community growing. And so do have a wonderful weekend, and looking forward to seeing you right in the XAUUSD live window, where we shall be coming here again to monitor real-time price action on the XAUUSD during the New York session today. See you then, everyone, and bye bye.